All right, let's talk about something that powers, well, literally everything, the energy market. If you've ever seen gas prices jump overnight and just thought, what is going on? Or wondered what it all means for your money, you're in exactly the right place. It all starts with something so simple. You flip a switch, you charge your phone, you fill up the car. Every single one of these moments plugs you right into this gigantic, invisible economic machine. But what if you could do more than just be a customer? What if you could actually understand this machine and maybe even use it in your own investment strategy? And when I say gigantic, I am not kidding. We're talking about the North American energy industry alone being a more than $4 trillion beast. I mean, that's just a mind-boggling number that finds its way into pretty much every corner of our lives. So, what is this $4 trillion world we're talking about? In this first part, we're going to connect that simple light switch to the complex world of investing and see what kind of role energy could actually play in your portfolio. Look, here's a huge question for any investor right now. With prices for everything going up, are your investments actually keeping up, and are you diversified enough? See, energy markets often dance to their own beat, totally separate from stocks and bonds. And that's exactly why so many people are looking at them as a potential solution to these big problems. Now, to really get a handle on energy investing, we have to understand a really basic but crucial difference. We're not just talking about companies here, we are talking about the actual stuff that powers our world. Okay, this is the main idea right here. Buying a stock, say an Apple, means you own a little slice of the company. But in energy markets, you're trading on the price of a physical thing, like a barrel of oil or a certain amount of natural gas. A good way to think about it is, are you betting on the price of apples, or do you want to own the apple orchard? It's that direct link to real-world stuff, supply and demand, that makes this whole market so unique. So what kind of stuff are we talking about? Well, in North America, the big three are crude oil. You'll often hear it called WTI, which just stands for West Texas Intermediate. Then there's natural gas, which has its main price point at a place called Henry Hub down in Louisiana. And of course, electricity itself, which is traded on these super complex regional grids. These are the actual goods whose prices are always on the move. And that brings us to probably the single most important word you need to know in energy markets: volatility. Because we're dealing with physical goods, prices can get absolutely rocked by real-world events. Think about it: a hurricane in the Gulf, a pipeline problem, a war somewhere. Heck, even just a surprise cold front can send prices soaring or crashing. Now, this definitely creates risk, but as you're about to see, it also creates a ton of opportunity. So the big question is, how does a regular person get involved without, having to store barrels of crude oil in their garage? Well, the good news is there are actually some really easy ways to get started. For most of us, the simplest way in is right through the stock market. You can buy shares in individual energy companies, anything from an oil giant like ExxonMobil to a big player in renewables like NextEra Energy. Or, and this is probably even easier, you can buy an energy sector ETF. Think of an ETF as a basket that holds stocks from a whole bunch of different energy companies. Something like the XLE ETF gives you really broad exposure to the whole sector, all in one single trade. Now, you've probably heard people talk about futures contracts. And yeah, that's how the pros trade commodity prices directly. But let's be super clear here. This is the deep end of the swimming pool. It involves a lot of leverage, it's really complex, and the risk is significant. It's a tool for advanced traders, not for someone just starting out. So this all leads us to the core trade-off, the big question every potential energy investor has to ask themselves. Is that wild ride of volatility really worth the potential rewards? Let's break down the pros and the cons. Okay, let's put them side by side. You can see right away, energy markets, yeah, they've got way higher volatility than the stock market. But, and this is a big but, look at those bottom two rows. They offer a potentially fantastic diversification benefit, and they can be a really strong hedge against inflation, which is something stocks only do okay at. And as for barriers to entry, yeah, they can be high. But if you stick to ETFs like we just talked about, they're actually quite low. So let's talk about the upside, because it's pretty compelling. First, inflation. When prices go up, the cost of energy goes up too. So investing in energy can help protect your buying power. Second, diversification. Because energy prices can go up when the stock market is going down, it can help smooth out the ride for your whole portfolio. And finally, all that volatility we keep mentioning, well, for every risk, there's a potential reward, and it can create opportunities for some pretty serious gains. But we have to be honest about the downside. That same volatility can cause fast and painful losses. Prices can be totally upended by a political event happening halfway across the globe that you could never predict. And really, to truly understand these markets, you have to be willing to learn about everything from weather patterns to what OPEC decides to do next. It's a lot.
Okay, so you've heard the good and the bad. If you've weighed it all and you're still curious, what's a smart, responsible way to dip your toe in the water? We've boiled it down to a simple 3-step plan.
First things first, educate yourself. The U.S. Energy Information Administration, just go to EIA.gov, has amazing free data. Check out their weekly reports. You can literally see supply and demand at work. Second, start small. Seriously, don't go betting the farm. Maybe think about a small position in a broad energy ETF just to get a feel for how it moves. And third, and this is the most important part, manage your risk. The golden rule of investing applies here more than anywhere. Never, ever, ever invest more than you're truly comfortable losing. And that really brings us to the final question you should ask yourself. Look, energy investing isn't for everybody. It takes a higher tolerance for risk, and you've got to be willing to stay on top of things. But for anyone out there looking for real diversification and a potentially powerful way to fight back against inflation, it makes you wonder, is this huge, essential, and volatile market the one piece that's missing from your portfolio?